Morning, guys. Sean from Max Options Trading here. Just gonna go over my Roku scalp from Thursday morning yesterday, um, and pretty much like the analysis behind it. It seems like video recap helps people a lot more than just posting and like typing out bunch of stuff. So here's another video. So this was a Costco 490 call strike. It's a weekly option expiring tomorrow. So again, scalping, capturing small moves, but playing it big, bigger position sizing than swings because we're gonna sell it, in a matter of minutes, sometimes seconds. But in this case, we held it for about maybe like little less than half an hour. So what I was looking at was a daily chart here. Okay, this was Wednesday, okay, and what really caught my eyes is the accumulation right over here. You can see very nice consolidation, nice volume accumulation here. Not only that, this area right here, if you sort of zoom out, it's an area of where previous breakouts happened. So around 480 area ish. 480, as soon as we broke above that, saw a gap up, and same thing over here. As soon as the 480 broke, gap up, 480 broke, gap up. Not only that, this was a previous demand zone right over here back in 2021 all the way till like pretty recently, May 2022. And then we broke down really hard, gap back up, we dropped back again, and now we were approaching it again yesterday. Now, previous demands, as mentioned in the previous videos and analysis, they are a demand zone at that time, but once it's invalidated, so like once it breaks below like this, it becomes a new set of resistance. Okay, so if you're wondering why did I get into calls here for a scalp if we broke below it and it's now a resistance? Because after the initial drop here, we got a break below the 480 area, but we consolidated, okay, with pretty good amount of buying over here. We pretty much broke down briefly, and market makers use all those orders for stop losses, accumulated all those orders, and did like a minor breakout right up here. And pretty much from then, we went sideways. What this is telling us is that the chart does not, the chart no longer wants to go lower than where it is right now. Because if there weren't any accumulations, what we would have seen is pretty much the same thing we're seeing right over here: lower high, lower low, lower high, lower low, and repeat. But instead, we held on to the key 480 area even from the past, and we were consolidating. And if you zoom in a little bit here, as you can see, every push breakdown here we had, every breakdown here we held. That's what the wick's telling us. Every time we tried to break below this area, the market pushed back up. Same thing, break below, pushed it back up. It broke here, but then it was followed by another morning star candle, which is a bullish reversal candlestick pattern. And we had the initial drop, pulled back, and what I was looking at also was the blue line over here. That's the 9 EMA on the daily chart. It normally acts as a support or resistance. In this case, it was acting as a resistance because we were right below it, right? And this was also a really crucial area, as you can see on the side POC line here. See the thick red line? POC stands for point of control, where most of the orders volume is sitting at, and you can also see that visually here. As you can see on the side volume bar, it's a massive volume bar sitting right on the right side, right? Okay. Going down into the 4-hour chart. Whoa, yeah. Going down into the 4-hour chart, we were coming down from a downtrend here, right? So let me get my arrow tool right over here. We had a downtrend, okay, and then we broke the initial break, right? You never chase the initial break because you want to see confirmation. The only way you see confirmation is we get a pullback and the pullback holds. What that means is that we get the initial break here, okay, and we're gonna pull back right to where the initial break started from. So we're gonna pull back here, okay, which is equivalent to right around this area, because we saw the initial break that's here. Gotta pull back, and we pull back to right where the first break of structure happened, which is right over here. Okay, so I'll put point A. There you go. So that's point A. Okay. Two things you want to see. When we get this pullback, you either want the chart to consolidate here, or sometimes it takes off right away. My usual entry would be the first green candle that pops up as soon as you get the pullback into this zone, pull back into the point A. Or in this case, Costco sort of pulled back and consolidated sideways. As you can see, we kind of just went up and down for 2 sessions. We saw another gap up, but we couldn't take this high out. What you want to see next after that consolidation is a new high. So if you do see a consolidation like this, you want to see a new high, right? Now then, that confirms that the previous trend, the previous structure is over, okay? And we are making a reversal to create a new trend, new structure, which is going to be the uptrend from here now. Okay. So today, I'm sorry, not today, Thursday, when I saw a pre-market gapping up with good volume, compare the volume here. Compare this volume, pre-market volume, to any other days. This one kind of comes close, but really the only green candle that comes close to this as far as size is the first break of structure volume here, right? So that's a lot of volume coming in, again engulfing all these other volume bars. Okay, so I'm watching pre-market. All right, now I don't want this to be a fake breakout, so I want to see an initial break and I want to see a small pullback. Okay, when I say small pullback, this is what I mean. I want to see something like a break, and I want to make sure that we sort of consolidate above the previous resistance, which is going to be the 487. As after we got the break of structure, we couldn't break above 487 with strength, right? So what you want to see is you want to break and you want to consolidate instead of something like this and this. You don't want to see a break and reject all the way. You want to see a break and consolidate, or at least a small one or two pullback handles, since we're speaking scalping, not swinging. Okay. So now let's actually go down to where the trade was executed. All these here. All right, we're gonna go down 3-minute chart here. Okay, so right over here. Let's play it. Okay, so open market. Oh, let me slow it down a little bit. I'm gonna speed up one more time. Okay. Sorry, I'm gonna reset the video because I replayed it way too fast. Yeah. All right. I'll replay. Okay, there you go. So market opens, huge gap up, first rejection. Okay, I'm gonna pause it real quick. So right at open, where are we now? We are right over here. Okay. We're breaking out. Got that small pullback right there, the red candle. But like I said, I want to see a continuation. Okay. I don't want to see the red candle continue and we fall all the way down. The later in the day, the stock Costco actually does pull all the way back because Sky gapped down. But my entry trigger was, I call this out actually really almost right after open. So 3:43 a.m. That's when market opens for me, and that's 3:43. Right, literally right around this candle. 3:43. Yep. So right around this candle, I got in because after the initial pop, okay, we got a pullback candle. It was a red candle, but we held it. We held, meaning we didn't go all the way back down like we did in the past couple times in this area. Okay, so we pulled back. We had a nice pullback candle and broke again, broke out above the POC right over here, thick red line. That's also another indicator. If you watch my previous Roku scale video, whenever a stock crosses above the POC, normally a reversal happens and vice versa. Of course, that's considering we look at every other chart, like indicators too, not just using this only. So I got in right there. And I also stated that looking for 21 EMA test on the daily chart as a first PT profit target, okay? Because 21 day on the daily chart will act as a resistance. And considering that I got a contract that expires pretty much in 1 day, I'm not gonna chance it. I'm gonna pay myself, I'm gonna take my profit. So 21 day EMA was 493 area. Let's go back here, 493. We got the initial break. Jumped in right here for a scalp. Let it play out a little bit. There you go. We got the initial pop. And there you go. Straight breakout. And you can also see in the volume here too as well. Follow-up, lots of follow-up buying volume after the initial pullback. Normally, this doesn't happen if the initial pullback becomes like a flush down where you'll see series of red volume candles follow this. But this was a different case. Trim for 25% at 4 a.m. And trim for 40% at 4 a.m. Oh no, almost. Oh wow, yeah, that was a... So 350, right around there. I trimmed another load up here. Contracts do move really fast and drastically because it's almost a zero DTE, right? 0 day to expiration. Whenever it expires, like really soon, the contract moves really quick, and that goes for the other side too. That's why it's really crucial to know what type of trade you're getting into and know your stop loss levels, because it could go the other way and you'll be down 40-60% instead of being in profit 40-60%. Play that one more time. I think that's when 350. Yep. So I pretty much sold my last load right at the top, for 60% gains on the scalp. This was about like 492. So going back to my PT, we didn't get a full test of the 21 EMA. 21 EMA is the purple line for me here, by the way. We didn't get a full test. We got like we got a test a little bit later on in the evening, but like I said, SPY was pulling back, and I wasn't gonna chance my profit, especially if especially if even like the RSI is crossing down from the overbought levels. I wasn't gonna chance holding a contract that expires the next day. So just let it play out a little more. We pull back a little bit and consolidate a little bit more. I think we move one more leg up before the actual flush down along with the S&P. Zoom it, fast forward a little bit. Yeah, so as you can see here, even here, like after we trimmed here, the Costco pulled back, and now the new point of control POC stands at around 490 here, right? And you can see when it tried to re-break above, it had a pretty hard time doing it. Rejection, 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 rejection. That means that it doesn't have the same volume it did here, which broke above this POC. Now it's rejecting. So that's when you can sort of identify exit strategies where, is this trade going to hold? Am I not seeing the same volume anymore? Maybe I should just sell for, profit. Maybe I should just sell for break even. That's where your post-entry analysis comes in. I hope that helps. I will post another analysis when I can. Thank you.